The beauty of US LNG is that it's first-of-a-kind large-scale LNG project that doesn't have a destination close, so nobody actually knows where it will go. It will depend where the shippers of this LNG get the highest price for the gas. BG Group, which accounts for majority of initial offtake from the Sabine Pass LNG terminal, in the past sold most of its gas to Asia. So we expect most of the gas to end up in Asia, but with time we'll see some volumes going to Europe as well as South America as well.
And you mentioned pricing. Overall, the LNG global market has been linked to the oil price. And as oil prices have fallen, so have these globally linked LNG prices. So how competitive are U.S. LNG prices?
Up until 2014, U.S. LNG prices were competitive if you look at the expected commissioning time. However, because the global prices have moved since then, it's no longer viable to send LNG to Europe or Asia if you look at all-in costs, so including the cost of actually building terminals. But because these costs are sunk costs, it's still profitable to send LNG to Asia, but to Europe it's not commercially viable at this stage.
So does that mean that I can buy LNG exports from the U.S. now, but if I wanted to go build another export terminal, it wouldn't be economical for me to do that?
In a nutshell, it all depends on your view on what the prices will be at the time of commissioning of those LNG facilities. Mm-hmm. It's important to say that these are very long-term projects, 20-25 year long, so you have to take a view of where the prices are going to be. What we're thinking is going to happen is that all the projects that have been given the go-ahead by the investors will go ahead, but anything new is very unlikely to be built in the near term in terms of the making decisions to build them.
So Elton, let's dig in on the money and the price a little bit. So Henry Hub is now $2.59. Can you build on that in terms of all-in cost? Like, how much would it take to get to Europe? How much would it cost to get to Asia? What would those markets wind up paying for our gas?
Yeah, again, as you said, it depends on the destination. What we estimate is that the all-in cost is around $8 per million BTU for the US gas. At the moment, it's if you again exclude the sunk cost, the marginal price of US LNG is around $5.4 per MMBTU. This is still higher than the current oil index prices in Asia, which are around 6.6. But this is so it does make sense to send it to Asia at the moment. But in Europe, we're seeing prices around 4.7, so it doesn't really make sense to send to Europe.
So how does this wind up changing the world of global LNG? I mean, it's going to change how investments go. It's going to, because usually LNG projects wind up being long-term contracts. I'm going to buy this kind of LNG from you for the next 15, 20 years. How does U.S. LNG help change that whole dynamic?
We're slowly seeing the buyers adjusting and readjusting their portfolios to have a larger share of short-term and mid-term flexible contracts. So that's where US LNG has changed the market. However, because oil price is falling at the moment, buyers are rather reluctant to revise their long-term oil-linked contracts too much,
which would make sense
when it comes to LNG.
But in theory, over the longer term, is it fair to say that now the global LNG market has become a buyer's market?
Absolutely, yes. We're going to see glut in the market for the next 5 and maybe 10 years, and therefore it will take a lot of time for the demand to readjust with supply, because we're seeing a lot of LNG coming online in the next 3 to 5 years, so especially from the US and Australia. So it will take a while for the market to absorb that extra supply.